All right, great weekend, everyone. Great to be able to address you guys on a Saturday here in Singapore. I just wanted to talk and do this episode. Actually, this episode I was struggling with the title. Will we achieve? Will the crypto markets ever achieve stability, or will the crypto markets ever achieve recognition? So, I think stability is a little bit not so important when you want to trade it. But if you are someone who is intending to invest in the space, right, you kind of want to be able to have some confidence to put money in it long term. So I would prefer stability as opposed to what's the other term I was using, which was opposed to recognition, right? I think this episode is going to address both angles because I feel that if we are going to if we want to see the whole market mature as a space and get recognized, right, then there are certain infrastructures that have to be in place before the current financial markets kind of will take us a little bit more seriously. But that being said, I think with all the news that has been coming out, as you know, Coinbase is having a $8 billion valuation, and I think plans to IPO. I think they're going through the pre-IPO sales round already, and even Bitmain, Bitfury, they are all planning to IPO, and these are billion-dollar valuations. So whether or not the valuation, okay, whether or not it's gonna be successful is another thing, but at the end of the day, you can see that the current projects from the crypto world are actually getting a lot of eyeballs because in the past, let's just take Alibaba for example. Okay, Alibaba came out into the market and the IPO was 250 million, right? So if it was 250 million at that time, it was one of the biggest IPOs, right? It was one of the biggest IPOs. I'm not too sure whether it's 250 million or 250 billion, but I know it was $68 a share. And at that time, I think Alibaba was already, I think, a good maybe 15 years old already when it decided to go IPO. And that was when it had already established itself as one of the leaders in terms of e-commerce, and they have already since then grown into a huge group, lots of acquisitions happening. So what I'm just trying to say is that in this space at the moment, right, it's still relatively immature. The markets are still so small. If you look at the crypto market, it's only 200 billion, but then you are having three companies that are valuing themselves at anywhere from 5 to almost 8 billion. So if let's just say we just value them all at 5, obviously we know Coinbase is trying to value itself at over 8 to 9 billion. So but let's just give the example that all three are 5 billion each. It's already 15 billion. And if you're saying that the current market cap is 200 billion based of course on the crypto markets and across all the small to very large exchanges, and it's 200 billion, and you have these three buggers that are going to be listing on the existing financial world at 15 billion, of course, combined, that's already pretty significant. And this goes to show the real world or the current financial world that, hey, good stuff can potentially come out from this space, which in turn would actually attract investors into this very, very tiny market at the moment. So, but nevertheless, the episode is about will the crypto markets ever achieve stability? So let's get into it. So I've prepared this very ugly PowerPoint slide. So I hope that you guys are going to be able to just I hope you don't judge me on the ugly PowerPoint, but more on the content that is available. Okay, let me just switch to the view. Okay, so firstly, I like to just I like to also address why the cryptocurrency markets are still so volatile. Firstly, it's unregulated or self-regulated. Most exchanges usually kind of self-regulate, or they kind of have a chat with the existing regulators, and then from then they will kind of try to come up with a framework that is appealing for that particular country. Okay, then obviously it boils down to how much integrity and how much corporate governance they want to have. This is within the company itself. There's no way that at the moment there's no like, okay, Huobi is talking to Binance, Binance is talking to OKX. I'm sure they all talk to each other. Okay, I'm very, very certain, and they kind of find like a common ground to work on certain regulations. I'm sure they are all friends at the end of the day. Okay. There's no overall oversight committee. So it would be kind of great to maybe say have CZ, Leon from Huobi, and then you have the CEO from OKX, and then you have maybe Coinbase, Arthur Hayes, all coming together and forming this oversight committee, right? And then at least there can be a proposal, like you guys are coming together and coming up with this framework, and then we know that, okay, you guys will be the thought leaders, the business leaders or industry leaders for the space. You guys are coming up with the framework. You're presenting it to the SEC or whatever, and then from then it has carries a heavier weightage and not an individual business owner, right, coming to propose something. This is how it's gonna be eventually. But I mean, there's no oversight committee as of now. Okay, then low to no KYC required. Okay, why do I say this? If you were to start a stock account, a trading platform account to buy stocks, margin trading and whatnot online. Let's say you use interactive brokers, IG Capital, you're using Amari Trade, TD, whatever. Immediately from the very get-go, even if you want to sign up on a free account, you have to put down like a full list of details. Then when you want to start trading, right, you have to either give your passport, if you're US, probably social security number and whatnot, ID and everything, right? So it's really full KYC from the very get-go. Crypto, on the other hand, at the moment, you can start with just a very simple email, and then create a password and you're ready to go, right? But your withdrawal limit is very low. But that being said, your withdrawal limit, as long as your daily limit doesn't exceed 1 or 2 BTC, you're fine. And most traders obviously don't cash out that much. Neither are they even putting that much to begin with. And based on the fact that the volatility at the moment is so low, for you to even extract 1 to 2 BTC a day, that means your current trading account is relatively large, and obviously you are planning to maybe cash out, obviously, to lock in profits. But 1 to 2 BTC a day, and it doesn't seem to restrict you to the amount that you can deposit, right? So if exchanges are going to restrict folks based on the level of information that is being provided by the trader or investor, then their account deposit will go up. I think then we have something there, because if you're going to be trading, less than $1,000, I completely understand that you don't have to ask too many things, and it kind of gives opportunity to certain countries that are usually sanctioned, or sometimes no one wants to do business with the sanctioned countries. So there's a list of sanctioned countries. Feel free to go and have a look, and then you roughly know. But sometimes it also is very unfair, because although these are sanctioned countries, right, it doesn't mean that they're always bad. It's just that the world kind of has already put a kind of a stigma or kind of representation of what they are. But in actual fact, maybe they're great for business, and it's just a matter of whether or not the exchange wants to do business with these customers or not. And I think this is a little bit sensitive, but what I feel is that there's a lot of stereotype, especially when we see certain content or articles being written about these sanctioned countries. Usually it's always about money laundering, terrorism. They're usually communist countries or whatnot, or just the whole country is just unstable. They don't have a proper banking system, and so it's very difficult to validate and do business with the people within these countries. But in actual fact, right, the people may be no different from you and I. It's just that they are kind of shut off from the main world, right? Because I'm from Singapore, I don't have this problem. If you're from America, Canada, Australia, you don't have this problem. But if you were someone from, say, North Korea, Iran, these are these countries usually tend to always have issues with getting banking facilities, or Pakistan or whatever, you always have problems. having banking facilities or even having access to financial markets. So if you're someone who is wanting to have an opportunity to participate in the markets, in the crypto markets, it becomes like, wow, hey, I can finally participate as long as I have an internet connection, and people are not going to judge me because I am from Iran or I'm from North Korea. It becomes a whole different, it opens up a whole different market for everybody, right? And I think this all just boils down to what kind of appeal does the exchange want to have, okay? So I went on a little bit on the low to KYC required, but I need to help you all understand this so you know the importance of KYC. Obviously, KYC is to allow the exchanges to know who you are at the end of the day, okay? So incoming funds are via a centralized currency, decentralized currency, which is Bitcoin and Ethereum, right? So sometimes, especially if you're a miner, especially if you've been mining so much, or you've been an Ethereum miner for God knows how long, you are now, no one knows exactly who you are because it's just an IP address, right? Obviously that IP address can be linked to a particular country, but then again, folks who really want to game the system, right? They can always do some kind of routing or what do you call it? Suddenly I forgot that name. Like you protect your IP address, and I just can't come. Anyway, there's those systems, right? I just can't seem to think about it at the moment. So end up when you fund the exchange, right? When you fund your account with BTC or ETH to liquidate, obviously, the exchange doesn't really know like where is it coming from. So this is the things that are happening at the moment. So that also causes volatility. Then the market cap is relatively small, as I highlighted before at the beginning of this episode. So existing financial markets, the stock markets, the bond markets, the futures and derivatives market, the forex markets are huge in comparison to the crypto market, right? So when you have such a small boat, right, a small little pond as per se, whatever movement, seriously, whatever movement, 2 billion worth of just 2 billion, right, can shake our whole market already. So that's kind of like the good thing and the bad thing, right? If 2 billion comes in, it moves the market significantly. If 2 billion goes out, it pulls down the market significantly, as we all know. Then obviously, so far we've been experiencing anywhere from 10 to 20 billion, sometimes 30 billion, and that already gives us quite a bit of volatility. Traders love it, but investors will be like, I probably won't want to go in right now if I'm not someone who is a high risk taker. So then the last point for this particular slide is difficult to determine the intrinsic value of BTC. As much as I would like to, I've been, of course, been in this space for the past 3 years, right? And we want to kind of validate, are the hash rate going up? And then apart from that, hash rate going up, are there actual adoption of merchants taking up BTC? I don't really see much of that. At the same time, also the transactions per day, whatever we try to want to evaluate it, unfortunately, we will never be able to fully validate BTC, because right now, if BTC is valued at $6,000, then, $6,400 to $6,500, that is exactly what the market wants to price it at. Simple as that. You don't have to ask too much, because it's so hard, because it's not a company, right? There's no revenue that will ever come from all this. No one actually owns BTC. So the good thing about it is that you can take it like gold, right? Gold was just created and perceived as a form of value because of the difficulty of trying to mine gold, right? So now having a digitized version of gold as per se, because now the world is considering Bitcoin to potentially be the the digitized version of gold. The good thing about Bitcoin is that you can actually easily spend it if you want to. Gold, unfortunately, you can't hand someone a piece of gold at 7-Eleven and buy a drink. It doesn't work that way. So could Bitcoin serve as both a currency and store of value? Now, this obviously from a purist point of view, you cannot, because these two things are actually separate. If you want to be a currency, right, it has to be consistently used. There has to be plenty of transactions in this particular currency as much as possible, and a lot of people recognize it as a currency and it's stable. Unfortunately, that's not the case. Then you have store of value. So store of value would mean that, okay, in the event of if there's a certain event that occurs, let's just talk about global financial crisis. It will prove to the world that when there is a pullback in the stock markets or the bond markets or wherever the financial crisis may come from, right? BTC holds its value. So yeah, so there has to be some relation. Then when the markets start to become a little bit more buoyant and bullish, Bitcoin kind of stabilizes, it doesn't go up as much. So this is kind of like where we should see it. Then we have to deal with the halvings and whatnot that could potentially bump the price up. So 2020, I think September or August is going to be the date where there will be the halving. Then there will be less coins that will be rewarded to miners, and that's when the price could potentially spike. So you've got another good almost 2 years. Okay, so yeah, there you go. Now, what do exchanges offer at the moment? So let me cover why the exchanges are important. So you are now able to buy and sell crypto. That's a given. You are able to do margin trading, OTC, and of course derivatives. Fiat to crypto is available on Gemini and Coinbase, and of course I think Bitstamp and wherever is kind of relatively prominent. There are also smaller crypto to fiat exchanges that are available in respective countries, and but however the fees vary, right? Because it's always dependent on the currency involved. So very volatile currencies. Very volatile currencies usually are like the Korean won. At the time, it was up to 30% premium just to buy Bitcoin. I'm not sure what exactly is the premium as of now, but I'm sure it's relatively high as well. Then you have if you are in US dollars, pounds, and Singapore dollars, Canadian dollars, Australian dollars is relatively okay. But I would still say it's expensive. I've heard it's still anywhere from 3 to 5% to get back from from crypto to fiat. It's not like cheap, okay? And if you're on OTC, it's even worse because most people can be front running you in terms of the price, and there's stuff that can happen. So you have OTC trading, which is of course very popular amongst folks who don't want to fill up the order books, or they want to just remain kind of relatively anonymous in terms of the transaction. Then you have derivatives and fiat to crypto. Yeah, so these are the current offerings at the moment. Now, why so many stable coins? So all these stable coins, okay, will eventually also mean more channels to enter in and out of the crypto market. Okay, when you have more channels and entering into the crypto market and out of the crypto market, obviously it's going to provide plenty of liquidity, but at the same time, it's going to potentially push the market cap upwards, but hopefully not like suddenly all in, right? Because at the time there was only one player, which is USD Tether. So that's why we have a lot of FUD, and I think it's great that we have more offerings, more stable coins, because USD Tether will no longer have the balls to kind of play that kind of game anymore, because suddenly you have more market players that are potentially more credible, more transparent as opposed to USD Tether. Then you are, if you want to start pulling up a stunt like that, eventually no one will use you, and then from then you lose the potential transactional value and the fees that you could that Tether could earn, right? Because suddenly now there's Pax Coin, there's TUSD, there's Gemini USD, there's Coinbase is probably going to come out its own offering, and then I think recently there's another stable coin that's coming out. Plenty of stable coins. Everybody is starting to jump onto the bandwagon already, because it's all about volume, guys. It's not about the speculative. Don't stupidly start to go and buy stable coins, okay? It doesn't make sense. It's more of the fact that you are now seeing more players, service providers, okay? That's all. Okay, so this in turn will provide stability. Let me be very clear. Why is it going to provide stability? Right now, if we want to trade cryptocurrencies, it is BTC or Ethereum, right? So it's kind of challenging when you want to lock in profits. Say you lock in profits to a altcoin Bitcoin pairing, okay, an altcoin Bitcoin pairing. You made profits on the Satoshi value, but the next thing you know, you see the Bitcoin price just takes a dip, right? So you are not able to lock in profits comfortably. unless your sole purpose is to build Satoshi. That means you don't care about what the US dollar, pound value or euro value of Bitcoin is gonna be. You don't care. You are really focused on Satoshi. Fine. But for everyone else, especially if you are someone who is in asset management, you are fund manager, family office, whatever, trader, you're gonna lock in your profits in USD, or USD means fiat, okay? Because at the end of the day, your investors are coming in. These are the big investors. These are the ones that have the money. They're gonna lock it in US dollars because they don't recognize Bitcoin as the next big thing. Right? It's the big thing now, but they don't recognize it as something that could be serious at the moment. Sure, you can buy stuff with Bitcoin. There are transactions being done at the $1 million levels and even potentially $1 billion levels with Bitcoin. But I think at the moment, it's still very far away from whatever people claim it is. So every trader, as in you're talking about insti trader, is going to lock in their profits at the end of the year and base their bonuses on US dollars. No one's going to bank their bonuses on Bitcoin. Sure, I'm sure there are a few institutions that will take the balls to do that if they believe in the long-term value, but at the end of the day, there will always be a majority of that portion locked in as US dollar profit, okay? So eventually the dominance will drop, okay, which is okay. So before that, I don't want to jump the point. So provides more options for traders and investors. So right now, if I want to lock in my profits, I'm someone who is completely new to the market. I am definitely more inclined to see which stable coin is going to offer me the lowest fees when I buy that stable coin and get out of that stable coin back to fiat, right? All I care about is that. If I want to be a trader, that's how I would think. Now, if I was an investor, then I'll be, okay, I find that these projects within the crypto space are decent. They are looking very, very promising. I would like to start parking a little bit of my funds in. So right now, apart from just buying BTC and entering, I am now having the option of stable coins that is so easy for me, $1 to $1. I enter into that stable coin, I buy into that particular project. Simple as that. I put it as part of my portfolio. I see how it goes in the next 5 to 10 years. Okay? If it does well, obviously I cash out, goes back into that stable coin. From then, if I want to lock in profits and go back to fiat, I can do so, because that is what the stable coin company service providers are offering at the moment. Okay, Bitcoin will eventually drop in dominance. This is a certainty. And it has to be like that, because if you have Bitcoin forever going up and pulling up down the whole market, it's not fair it's not fair to base a drop on a particular currency instability. Truly, Bitcoin is unstable, right? If you want to pull down a company because it is failing in delivering on its promises, that's the right thing to do. If it fails on its revenue declaration, it deserves to go down. If its sales has been dipping quarter on quarter, year on year, it deserves to go down. But it does not deserve to go down just because Bitcoin decided to take a shit. You know what I mean? It doesn't make sense, right? So this is kind of like how I see the market eventually maturing, because after all, guys, we are the ones that are trading the market, okay? And whoever is behind it will eventually have to understand that, but they're going to make as much money as possible and manipulate the market as much as possible before all this steps into play. And people will eventually figure it out, how we're going to play the game and take that power away from you. And that's where all the stable coins come in. Okay, Bitcoin could potentially become a store of value, which I already highlighted just now, just like gold, rather than a currency. So that's pretty straightforward to understand. Altcoins will then be pegged to stable coins instead of only ETH and BTC. So this is more of pretty self-explanatory. Okay. Now, how will that correlate to the current financial market? So, crypto is already an asset class. However you want to be frustrated or whatever, or people are pessimistic, optimistic, the older folks will have to accept this. Okay, the crypto markets are definitely going to be here to stay. However, how it evolves, how the markets evolve eventually, right, to kind of boost that credibility would depend on the industry players at the end of the day. Okay, and whoever are the thought leaders who are going to be determining this has to bear in mind that if they are here to stay, they have to also play ball with the existing systems and kind of like find a way to have this cohesiveness. Then everybody can grow. Okay, so tokens will evolve and have actual intrinsic value. So apart from the existing tokenomics, there could be projects that start having products and services, and those products and services are deemed useful. Then from then you start having revenue. Revenue will cover operating costs, any kind of marketing costs, whatnot. Okay, and then you have you can lock in profits, and that's when these profits come in. Apart from rewarding equity holders, you could potentially also buy back the tokens from the existing market, from token holders like us, and increase that value over time. Stablecoins will offer crypto to fiat conversions, very straightforward. Traders and investors will then have to pay taxes on profits. This is something that every country wants, because if you're making so much money, obviously I want a piece of it. It has always been like that. It's just a matter of how you decide to declare your taxes and profits. I'm not someone who is a financial advisor on this. You can go and check it out yourself. How you want to lock it in, that is up to you. So profits can then be channeled back to stocks, property, art, gold, or whatever consumer-related happiness. The end. That is practically how it's going to play out, guys. So it's more of whether you see, obviously you guys see it, because everyone in the crypto space at the moment has already matured in terms of its in terms of their knowledge in the space, and I feel that there's so much potential still, and I only see it maturing over time, and this is what I like to see. And once our viewers and users start to figure that out, they can actually start building a portfolio of cryptocurrencies and link that up and build a holistic investment portfolio, whether it's, which is to kind of complement to their existing stock, bond, mutual fund portfolio, or even properties, right? Everything bundled together should be pretty awesome. And I think it's more of enjoying the whole process and the journey of how it's going to evolve. As quoted from the Huobi way, only in revolutions, right, can there be new opportunities being born. This is something that is very, very big in terms of, we are in a revolution. At the moment, it's a revolution and evolution, perhaps, but definitely there is an opportunity here. So I hope that you enjoyed this video. Give a like to this video if you felt that it was and value add to you. Also, don't forget to subscribe to the channel, and I'll see you in the next live stream.